Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. The following is a conversation that I had with Matt Frankel about retirement. Now, this is going to be part of the Rive Project's education series where I want to cover a number of fundamental topics that I think every investor should know about. In this case, when it comes to retirement, I'm not the expert, so I need to go to the experts. That is Matt Frankel. He knows more about this than anybody that I know. So I hope you enjoy this conversation. These videos will be available in Rive Investing's education series, and you can follow Matt Frankel on YouTube at Matt Frankel CFP. And now on to our conversation. All right, and joining me today to answer some questions about retirement is Matt Frankel. Matt, what is a Roth IRA? How do I get involved in this, and what's the difference between that and a traditional IRA?
Yeah, so a Roth IRA stands for Individual Retirement Account. It's a form of investing account that is designed to help Americans put away money for retirement. Now, the Roth IRA is different from what's called a traditional IRA. Those are the two main varieties of these accounts. And the big difference is the tax treatment. So with a traditional IRA, you can contribute money now if you qualify. There are some qualifications you have to meet. And you can get a tax deduction for your current contributions. In other words, if you made $50,000 this year, and contribute $5,000 to a traditional IRA, in the IRS's eyes, that reduces your income to $45,000 for tax purposes.
That makes sense.
With a Roth IRA, you're essentially kicking the tax can down the road. If you don't get a deduction in this year, you get no current year tax benefit, but anything you withdraw from a Roth IRA in retirement will be 100% tax-free. So your income this year would still be $50,000, but no matter how big that Roth IRA grows, between now and when you retire, you can withdraw all of that and you don't have to pay a dime in tax. It's like you had no income at all.
So the arbitrage here would be, do you think your tax rates are going to be higher or lower in retirement? And we don't necessarily know depending on when you're going to retire, but if you're in a low tax bracket today and you think your wealth is going to grow over time, maybe you will be in a higher tax bracket. So maybe that Roth is a good idea, or the opposite, I think, is the way that a lot of people have thought. Like, well, my income is going to be lower in retirement, so my tax rate's going to be lower. And so that's why people trended towards a traditional IRA. And you can actually do both, too. So you can kind of play both sides if you want.
Yeah, you're right that we don't know. For all I know, in 30 years when I'm retired, the top tax rate could be 70%, or they could have abolished the federal income tax at some point. We don't know. Both of them are theoretically possible. But having said that, Roth IRAs generally make the most sense for people who are in the lower income tax brackets right now. People who wouldn't really benefit as much from a current year tax deduction. So what you're doing there, you're locking, if you're in, say, the 10% or 15% tax bracket, you're locking in that tax rate now in exchange for tax-free income in the future. And like you said, maybe we all plan to be rich when we retire. So hopefully you're in a higher tax bracket then. If all goes well. But it's more, for me, I maintain a small Roth IRA that I opened a while ago. And for me, the biggest benefit is because it creates certainty. No matter what tax law happens between now and then, I can withdraw all that money tax-free.
So what can you invest in a Roth or a traditional IRA? Can I go out and buy stocks? Can I buy crypto? Is it everything in mutual funds? I think in accounts that I've had in the past, you're kind of limited to funds. So is that on a case-by-case basis, or what are the limitations, or what's the world of possibilities?
Yeah, I mean, it depends where you open your account. That's a big part of it. There are some things you're generally not allowed to invest in an IRA, like options, for example. You can't just like day trade options in an IRA for the most part. But if you open an IRA with a traditional broker, I use TD Ameritrade, for example. There's a bunch of them out there. You could buy pretty much any stock, bond, mutual fund, ETF you want. You can leave some of your money in cash. There's a list of investments you can buy. And it's pretty much anything that you could buy with a traditional brokerage account, with the exception of things like options and futures.
Mm-hmm. And what kind of investments do you like for your retirement account? Because I think, we're not giving individual investment advice, but as you look at what you're putting there, what kind of stocks or mutual funds are you looking at?
Yeah, so there's a bunch of investments in my IRA. Diversity is the number one thing I would say. Spread your money out amongst a bunch of things. I have an ETF that's an S&P 500 ETF. Ticker symbol is VOO. It's the Vanguard version of that. My largest investment in my IRA is a company called Realty Income. Ticker symbol is O. It's a real estate investment trust. Great long track record of paying dividends, growing the business. It's actually beaten the S&P 500 handily since it went public, I think 28 years ago. Companies like that are great fits for IRAs. Not that you necessarily need to buy Realty Income, but the just idea that you buy things that have a long track record of delivering profits, a long track record of growing the dividend. Companies that are established, that have literally a zero chance of going to zero unless something crazy happens. These are the kind of companies like Apple, Microsoft, some of the big established companies if you're more of a tech investor. But just big, slow, and steady is what you want.
Set it and forget it. Would that be the right way to think about it?
That's kind of how I think about it. I mean, I set it and I do some homework every so often, but it's not as involved as stocks that I buy in my traditional brokerage account that I have to watch like a hawk, especially these days.
Yeah, I like to look at high dividend yields in companies that like you said, are going to be around for a really long time. Brookfield Renewable Partners, BEPC, would be the US version of that. Dividend yield of about 4%. Verizon is paying a dividend yield of 7%. I mean, I don't know. Are we going to stop using smartphones in the next 10 or 20 years? I don't think that's the case. So those are the kind of stocks that, look, you can sleep well at night owning companies like that. Even if the stock doesn't necessarily go anywhere, you're getting a good dividend at the very least. So there's another couple ideas as well. Well, thanks, Matt, for joining me in covering the difference between a traditional IRA and a Roth IRA. I feel a little bit smarter now, and hopefully the viewers do as well.
Thanks, Travis.